late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So we're going to jump back into the charts today. There is a lot going on in the markets. Another day, more tariffs kind of announced. Again, it seems we can't go a single day without more tariffs or something regarding tariffs, as well as some other escalations in the world in terms of geopolitical issues. So we're not going to get too far into that. We're just going to jump into the charts, see how it's affecting the markets, and then look at kind of some things I've been talking about. So we're going to start here on the volatility index. So basically, we've seen coming back to these support lines down here and bouncing up towards this resistance zone that I talked about. I said watch out for that spike in volatility to the upside, similar to what we saw in all these prior rallies here where we broke out above this trend line right through here. That's where we saw a lot of downwards pressure in the stock markets. So interesting to see, we're seeing volatility spiking up again, not quite above the more concerning levels here. So right above kind of 30 is what I'm really going to be looking at as a bit more of a concern. We'll take a look at it on the daily chart here just to get a little closer up look. But yeah, essentially this is what we're looking at. Came up here, rejected here, came back down, bounced, and getting a big leg up here, showing you there's a lot of volatility in the markets right now. We're going to flip over to the SPY. I'm going to show you this on the very high time frame. So we're going to look at the monthly chart here, get an idea of kind of what's going on in the market. So what we see essentially right through here, since 2009, we've basically gone on this bull run in the market. So you can kind of see price was stuck here. We have our 200-day moving average. This green line is a 200-week moving average, so a much higher time frame moving average there. You can see essentially we got underneath this kind of in our great financial crisis crash right through here. Ultimately, we did get back above it, holding it as support, and that's essentially almost what's acted as support for this entire run up from 2009 until today. Just kind of pointing out, we're looking at the bearish crosses of the 50 and 200-day moving average. So I'll zoom in just to show you. These are the two moving averages that I'm frequently talking about, the ones we've been watching that are really concerning to me right now. So we see this 50-day moving average in orange up top, and we see this 200-day moving average in blue. We basically came up here in our uptrend. We lost our uptrend structure. We lost our key uptrend moving averages. We got rejected by resistance. And then you see we came back. We tried to back test into this 200-day moving average, ultimately getting rejected again. Very bearish candle setup. So look at that. That's kind of how we knew the top up here was a potential top, because we saw this huge bearish candle setup. We saw bearish divergence. We saw oversold nature on our momentum indicators on the high time frame. So we de-risked ourselves before coming into this, like we had this downtrending price action and then just a fake out little pump here. We're in that little bit of liquidity and then dumping to the downside with that bearish high time frame downtrending price action, rejecting off this 200-day moving average, stuck under our daily VRVP point of control. So we're under a lot of resistance right now for the macro indices. And yeah, this isn't good price action, guys. So when we see this, we've lost these lows, so that means our chance at bottoming here is now kind of negated for now, because we have that lower low, lower high structure continuation. And also, just that confirmed rejection from the 200-day moving average is not what we want to see for our continuation. So looking back now, we want to look at prior examples. So I've pretty much just outlined since 2009, every single time that we've had a bearish cross of the 50-day and the 200-day moving average. And then I also looked at the respective drops in the market when that occurred. So right here, we had that bearish cross. We had a 21% drop in the SPY. Over here, we had our bearish cross. We had a 16% drop. Right here, another bearish cross, a 20.5% drop. Right through here in 2020, this was our COVID drop. So a lot kind of more severe of a drop and very fast. That being said, it kind of bounced back up, recovered from there and went up to the right. So that was a 35% drop. And then we saw 2022, we had a 27% drop from the peak to that low. So looking right now, you know, based on history, we could expect a 20 to 25% drop in the stock market. So looking where that would actually put us here is down to our areas of interest. So we have this upsloping trend line up through here. You know, it does offer a little bit of support. That being said, our trend lines are kind of a little dubious. We definitely are paying more attention to our horizontal support. So you can see this prior high is going to act as a lot of support. So we're going to look to potentially look at buying in through there. So even down to this 0.5 Fibonacci. So if we get towards a $500 SPY here, SPDR, we're really going to look at starting to DCA into that and on a dynamic basis, so increasing our buys to on the lower targets. Ultimately though, we're going to be looking to acquire in this 20% to 25% region here, so that Fibonacci golden zone. That's going to be my most kind of bullish case place to accumulate the SPY. Why also I think that's a good area is you see basically on all these dumps right through here, we came back and we retested this 200-week moving average, bouncing from it as support, bouncing it from as support here, support here. We did break below it briefly on the COVID drop here. You know, not really surprised because there was basically everyone was pricing in that the world was going to shut down. So we saw a severe dump here. Ultimately though, regaining that 200 week here, we just swept underneath it a little bit. So holding that 200 week as well, you can see it's just acted as really good support for the last 15, 16 years or so. So we're going to look for that potential to accumulate in that zone. You know, anything, if you can be picking up the SPY anywhere around here, I think it's going to be offer pretty good value for the long term. So looking at potentially acquiring or accumulating down here. Otherwise, we're going to take a look at our momentum indicators to get another little sense of what's going on in the market. So similar kind of why also I wanted to point out the similarities in all these cycles here, or all these little corrections here, is we had that bearish cross of the RSI. You see the orange line on the DMI breaking above the blue line, signaling that bearish momentum. We see the bearish cross on the MACD, same thing that we saw through here, same thing that we saw over here. So every time we see those bearish crosses on the RSI and the MACD, and we see the bearish momentum building on the DMI, and then we also see this bearish divergence here. So when you see price putting in higher highs and you see the RSI or the MACD putting in lower highs, that is a bearish divergence that signals that the trend strength is slowing down and we might be due for a broader retracement, which is usually what we see. That's another warning signal we can look at. But essentially, you know, the SPY is looking pretty rough today as well as lately, losing our key support levels, losing those lows. So a lot of work to do for the SPY here. If we take a look, yeah, we're just stuck still under these moving averages. What we need to do is put in those higher highs, higher lows, regain these as support, and then we can talk about a continuation from there. The NASDAQ's going to look pretty similar here, also breaking down from there, looking like we're headed for that confirmed bearish cross of the two moving averages. We see that the RSI can still come down quite a bit, and the MACD is only just experiencing its bearish cross, so still room for it to come down more, showing more weakness than the SPY. You can see these lows are lost by a little bit bigger of a gap here. Flipping over to the Dow Jones, holding up a little bit better actually. So holding the lows here, you know, that's actually decent. I like to see that. Ideally, we can hold this and then keep trying to continue up from there. You know, we don't want to see either. It might just be following but lagging a little bit where we start to see it break down, retest that, and then that continuation to the downside. The IWM also showing some weakness. It was down a lot more. So getting a little bit of a bounce. I think if we look at the very low time frame here, you can see getting a little bit of a bounce, but we're stuck under this horizontal resistance. We did get that confirmed bearish cross of the averages here. So I wouldn't be surprised to see a little rally by the IWM potentially. What we want to see is this index, the IWM, so the Russell Shares 2000, that makes up the majority, all the small cap stocks in the stock market. Generally during times of recession, they're all going to go down together. If we start to see the IWM showing some relative strength ahead of the Dow Jones, the NASDAQ, and the SPY, it might signal that kind of companies are getting to valuations where people are getting more interested in starting to buy. offering that support. We also see that the 200-week moving average offering a little bit of support here, but breaking below. So we need to watch this. We might come back up, retest it, and continue that downwards price action. We still have bearish momentum on the directional movement index, and we have room for the RSI and MACD to bleed lower. So I don't think we're going to get that reversal move for the IWM quite yet. I think we're due to bleed a little bit more, and then we'll see what goes on from there. TLT up today. So did break down slightly from this trend line here, but regained it. So we're doing all right for TLT for now, continuing to hold that position. Gold here up 1%, again continues showing that crazy relative strength. That's what I'm talking about when you see gold on a run like this, and you see the IWM, the Dow Jones, the NASDAQ, the SPY, they're all down under their key moving averages. You see the dollar getting a little bit of strength here, and you see volatility spiking. That tells me that it's risk off right now. You know, too much uncertainty in the markets. Nobody knows what's going to happen with tariffs. There's a lot of economic data coming out this week. So we've got unemployment numbers, we've got PMI numbers. So it's going to be really kind of telling as to like for the employment situation, as well as on the manufacturing side of things. But yeah, we see gold doing well. Oil up here 2.7%, bouncing from this trend line into these moving averages. So that's also not going to help. If we start to see oil go on a bit of a run, maybe due to the oil tariffs that Trump just threatened on Russia or anyone buying oil from Russia, you know, it could put some inflationary pressure on oil as well. So we're just going to continue following that. But right now, not looking good from a macro perspective in terms of price action. So obviously, I can't predict whether or not some bullish news comes out or whether Trump pulls back on tariffs. You know, it's impossible to predict. We just follow the charts and the price action. The major stock market indices tell us what kind of the market is thinking. The market is never wrong. So assuming that the market is wrong, they're pricing in the same kind of the exact same uncertainty that we're all trying to navigate. So don't try to fight the market. Just let it tell you when we're in an uptrend, when we're in a downtrend. There's a time to go long, a time to go short, and a time to go fishing. We're going to continue to go fishing. And by fishing, I obviously mean we're going to be out there, we're setting our hooks, we're looking for those setups, and then we're getting ready when the fish do come to bite. So when we get that technical confirmation, then we can really just reel in aggressively and position ourselves getting ready for that leg up. We're going to take a look over at some stocks now, see how they're doing. So we see GDX here, that's the gold miners ETF. So we did get that inverse head and shoulders breakout here, currently still holding above that neckline, so good for continuation. You know, with that target up here, so upwards to kind of $51, $52. We see in terms of our momentum, the DMI losing a little bit of momentum, the RSI and the MACD also losing that momentum. And you see we have that bearish divergence on the daily chart here. So we see this from here, higher highs and then lower highs on the RSI to MACD. So we could be due for that breakdown, broader correction in the gold miners. If we come back, look for that support here at the 50-day moving average, and if we get a bounce from there, it could offer a good swing trade opportunity. GDXJ is going to look pretty similar here. So just the junior gold miners, very similar setup, just slightly more volatile. We'll take a look at Meta here really quick. Actually, Meta's I'm not too interested in them right now. We are in that downtrending price action, stuck under the 50-day moving average. We lost this trend line. We lost our 200-day moving average. We've got bearish momentum favored on the DMI, and we've got that bearish cross on the MACD with that histogram flipping red. So not interested in Meta at the current price. Tesla, I did mention, you know, under $250 could be a decent opportunity to DCA. That being said, look at this daily chart. We're headed for a bearish cross of the RSI. We've got that bearish cross of the DMI, so more bullish momentum favored on the direction, and then our MACD here curling over. It looks like it's headed for that bearish cross. So we are at that 200-week moving average, which is good support historically speaking, but we can see that on the daily chart we could just break down more. You know, we might come back looking for lower targets at 786 on the low time frame, is currently at $236. So You know, if you're looking to DCA $235 to $250, anything in there is not the worst place to be DCAing, but you have to recognize that weakness in the market. And why I'm not personally buying at these levels, because the stock market is continuing to show that weakness. The gold is showing that strength, so that risk on, risk off narrative really showing itself. All the uncertainty in the market, it's just not worth it to me to really be taking any positions here until we get that confirmed higher low, and then see, maybe we can go from there and see what's going on. But I'll take a quick look at the 4 hour here. Same thing, guys. So if we look at the daily chart, that technically is going to play out over the coming days and weeks. And then if we look at the 4 hour chart, that might be what plays out over the coming days. So we can see bearish momentum on the 4 hour chart, bearish momentum on the daily chart. I would be looking at lower targets for Tesla. So anything closer to 235 is going to be that low time frame retest of this Fibonacci here. Otherwise, I'm looking for kind of more kind of a higher time frame possibilities lower down, kind of closer on this trend line. Yeah, if we get something over here anywhere under $200, I'm going to be pretty interested in Tesla. So $175 to $200, that's where I'm probably going to start building a position. $235 to $250 could be decent DCA territory. Just recognize that potential for further downside, and it's definitely a possibility, especially with how markets are looking. Nvidia here down 4%, 5% on the day, so still stuck in kind of this downwards consolidation pattern here. You know, still very overextended from when it began its run. If we take a Fibonacci from that breakout here, we could see Nvidia come back here even to $80, even down to $70 or sub $70. That would be insane. So looking here, if we were to get this opportunity down somewhere around here in this Fibonacci zone with that 200-week moving average, given the forward guidance for Nvidia and kind of the future of AI, that could be a really good opportunity to be accumulating down here. Otherwise, same kind of thoughts, guys. Like, it's hard to be buying into these stocks unless you're DCAing. If you already have a position and you just want to DCA, then there's nothing wrong with that, but you need to recognize that risk in the markets and that potential for further downside. Looking at Google, see, this is what we saw. We were watching this one, hoping it would regain this trend line. Rejected, back below, not interested in Google. Dell down to $90 here, so also just coming back to our support zone. You know, as long as these lows hold, this could offer a decent opportunity, but we need to see that stock market strength. AMD here back to $101, coming, just retesting this down sloping trend line. We'll take a look at the daily, see how our momentum indicators look. So yeah, just bearish momentum across the board for stocks, guys. I'm not interested in buying into these downtrends until we get that confirmation. It's not going to be right away. To get confirmation on the daily and weekly charts, it's going to take weeks, if not months. So really be patient. Don't worry about rushing into anything. We're going to be in the positions when we get that technical confirmation. Looking at Tempest AI, another one that I'm kind of interested in here. So we are breaking below our Fibonacci, so we need to hold this support zone right through here. Otherwise, we are in that downtrending price action. So looking here, Palantir down a little bit as well. Also might be starting to come down to an area of interest. We see, yeah, coming to that level here, but that bearish momentum on the daily. We'll take a look at the 4 hour quickly. Also, we see a little bit better of a setup, but still that bearish momentum on the DMI. More work to do. We lost these lows, so we are those lower high. We're back into lower high, lower low structure for now. Nothing to write home about. Looking at Baba here. Baba's one, you know, I might start rebuilding a position closer and under 125. I kind of pointed out this wedge that we talked about, this previous one that broke down over here. So same thing that we're seeing here, breaking down from the wedge. First area of support, kind of 120 to 125. You know, you're going to be looking for more of a level down here in this Fibonacci retracement. You see we've got our 50-day stacked here, so that's why I kind of think this area could offer decent short-term support, but we we might just bounce into this resistance line again. So we might come down, we tag that 50-day as support, go back up, we go lower highs, ultimately lower lows, and then just downtrending to these lower targets. So this could be a swing trade here if we start to see strength in the stock market. Otherwise, we're looking at these lower targets in these Fibonacci levels. You see we've got the 200-week moving average, we've got our 200-day moving average, all in this Fibonacci golden zone. So looking to build a position in Palantir from 90, looking to build a position in Alibaba from about 95 up to about $105. Looking at Intel here, this is one we're interested in. We just want to see it hold these lows here, so doing better than some of the other ones because it had this nice breakout. It gave it that kind of window of a bit of a cushion, let's say. It was able to come down a bit more without losing this kind of these higher low structure. We're right at the 50-day moving average. We'll take a look again, just bearish, more bearish momentum on that. So I expect us just to continue coming down. We have this daily gap fill that likely will finish filling. I think if we come down to $21, anywhere down to that $20 mark, if we start to see the bounce, that could be a swing entry in Intel, but we're going to wait for that confirmation. We'll take a look over at crypto really quick. I'm not going to look at too many altcoins because stuff's just kind of continuing to break down. We look at the 4-hour on Bitcoin here, getting a little bit of bullish momentum, but that being said, look at this. We're stuck under these key moving averages. Look, this is that bearish wedge that I was talking about previously. So we've got this trend line and we've got this trend line here. Basically, I just expect us to come back up, retest these moving averages, and that's going to be a lot of resistance here. We could start to put in a bottom. This would be the most bullish price action if we could get back above these key levels of resistance. So that's that 200-day, that 50-day, all this VRVP shelf resistance in through here. That's what we want to see. Otherwise, we could just experience a rejection and continuation to the downside. Look at the daily. The daily, although a little bit of bearish momentum kind of favored on the daily still, we are coming from more oversold areas. We'll take a look at the weekly here, and we're probably more oversold on the weekly. So yeah, we'll see what happens from here. Either we're going to get this continuation where that bearish momentum continues to hold above the bullish momentum here on the DMI. We see our MACD, if it'll come down a little bit more, seeing it, was bottoming down here, so still room for it to come down. The RSI has kind of bottomed to similar levels, so we're going to be watching that for now. Nothing really too interesting going on, in my opinion. You can just see here, waiting for that either confirmed bearish cross of the moving averages, or we're going to get back above it, get that bullish structure, and then continue from there. Bitcoin dominance up again here, breaking out. That's what I said. Don't fade Bitcoin dominance. It continues to show strength. That's why we're not interested in taking really altcoin positions or Ethereum positions, because dominance continues trending up. We see ETH here up a little bit, but in that downtrend price action, we lost the lows. ETH Bitcoin put in new lows actually yesterday on this downtrend. So total 3. Another one, just everything's kind of just bleeding, guys. It's hard to really buy into anything when you see all this weakness across the markets. We saw total 3 came right to that 786 wick and bouncing from there. We'll see if that can actually hold as support. So good little bounce from here, but we need that uptrending structure at least on the daily chart, and we look like we're going to confirm that bearish cross of the 2 moving averages. So we'll continue following that one. But yeah, others dominance continues downtrending price action. So that's really not interested in too much right now. We're going to take a look at our Bitcoin miners getting hit, obviously, with Bitcoin and stock markets getting hit so hard. The miners are not safe. We're stuck under this trend line. This was a weekly trend line for the cycle, so this is kind of a dangerous position to be in. We were riding this trend line the entire cycle so far in the Bitcoin miners, and then we've just broken it, and we've confirmed that bearish cross of the moving average. So we need to really pay attention We're going to likely get a relief rally at some point. It's just not sure when we're going to get it here. So there is support. We've got support in through here. But I figure a relief rally is going to send us back up into these moving averages here. And then that's where we're going to really need to pay attention to our momentum indicators. And then decide, are we going to de-risk our positions because we think that we're going to continue into a normal bear market? Or do we think that we can actually hold those, maybe we get reset on the high time frame, markets start to show a little bit of strength, uncertainty kind of leaves the equation, then we can actually see another leg up there. But again, if we start to see that rally into these moving averages and we're not getting that proper technical setup with confirmation, then that's going to be my signal that that's likely a dead cat bounce and it's more of a de-risking play. So it's just going to have to pay attention as that comes. It's not going to be something we can really predict. For now, I just have to hold what I have. We're getting to some key levels of interest, so I'll flip through all the miners really quick here. Just looking at accumulation ranges that I previously mentioned for Mara, anything under $10 down to $3. I know they're big ranges, guys. I'm not saying as soon as you hit $10 to go all into Mara or something like that. Like, you never go all in, really. Just dynamic DCA in these ranges if you're interested in miners. This was the bear market lows, so for them to go back to these prices with the amount of hash rate that they have right now and the amount of Bitcoin that they have and what they're currently valued at, it would be a pretty insane valuation in my opinion. So anything under $10 is going to be where I'm going to start to look at potentially buying more Mara. That being said, I want to be sure that the market structure isn't going to continue down. Otherwise, that's when I think we're going to come back to these lower targets if we go in a full-on bear market. So paying attention to the market structure and not just the asset itself. Same thing with Riot. Riot just getting to that accumulation zone here. So $7 down to this $3 range, might be looking at a place to buy Riot, but my thoughts, wait for the confirmation, wait for that uptrending price action before you're jumping in. Otherwise, it's not a bad place to DCA, but we are at the top of the range, stuck under a lot of resistance, so just remember that. CleanSpark also just at the top of its accumulation range. So a lot of these charts are all going to look very similar because the miners are going to be similarly beat down. Cypher here also looking like it's just coming to that range. If we get under $2 for Cypher, could be an opportunity there. Bitfarms just a massive underperformer here, underneath this level. Not a lot of support. We've got kind of a tiny bit right in through here, but we've got this we've got this gap fill in through here that might actually end up being filled. I'm not personally really interested in adding any Bitfarms right now, just based on the fundamentals. Hive is at the lower end of its level here, so the fact that Hive right now is being valued at basically the same price at the peak bear market lows, despite the fact that they now have a 25 exahash path in 2025, as well as they held about 70% of their market cap in Bitcoin alone. So it's pretty crazy. I just think the further Hive goes, the more undervalued they look as a company. I'm really surprised we haven't seen a big miner look at acquiring Hive, or at least merging with Hive, because of how much value's there. From a fundamental production perspective, they're really strong. So I really want to see Hive get some attention there, some interest from a bigger miner, and really give them that that ability to capture more not even more market share, but more attention. I just find they don't really get that same attention that other miners tend to get in some of the bigger caps. So Hive, fundamentally really good from a valuation perspective, really good value, but price ultimately not doing what we want it to do. Looking at Hut here, Hut's doing better, looking better. They did have some news from an announcement from the Trump kids. That being said, I don't really like Hut from the fundamental perspective. It's kind of interesting. They talk about America first, and then they invest in a Hut 8 backed company. So Hut 8 owns the majority interest in American Bitcoin, which is the new company they're forming. So it's actually kind of interesting that 75% of Hut's operations are Canadian based, and they're also a Canadian originated company. So although they claim to say the Trumps are all about America first, but they completely ignored CleanSpark, which is America's Bitcoin miner. They're 100% based in America. They're a bigger miner substantially with a much larger self-mining hash rate. They're more profitable, more efficient, better growth consistency, better track record. I don't know why that they went with HUT. It doesn't make sense to me from a fundamental perspective. Obviously, HUT's marketing team has done a very good job to attract some high-profile people that have really kind of increased the interest in the stock. So they have people like Anthony Pompliano on the board who's tweeting about it to his millions of followers. And then now we've got the Trumps obviously getting on board here. So marketing team, great job from HUT. You've secured some pretty high profile individuals to help shill that stock. That being said, I just focus on the fundamentals. I'm not really interested. Last time Eric Trump told people to buy something, it was Ethereum at $2,900, and we all know how that went. So just keep your eye on the ball on that one. Here we're looking at Iris Energy losing this trend line. They also did over here briefly, so not too worrisome yet. We could get back above it and continue up, but we are looking at that higher time frame accumulation range under $4 there. Looking at TeraWolf, they're kind of just coming into that range. We start to see $2.43 down to that 50-cent region as that accumulation range. Core Scientific, looking at come in here. I'm going to wait. I was thinking about potentially starting a position in here if the market showed some relative strength, but that's not what we're getting. So just flipping over BTBT, also falling out of this parallel channel, and we're looking at that accumulation zone of $1.60 and lower. Coinbase here at $1.67, looking at the potential accumulation in here in that higher time frame Fibonacci zone. MicroStrategy getting a bit of a bounce here from that 618. We'll see if we can continue this breakout price action. That looks pretty good on the weekly. We'll take a look at the daily chart here. So what we've got, higher low, higher high, higher low, higher high. We did lose the higher low here on the daily, but it still looks good on the weekly. One higher low and one higher high on the weekly. If we can get a couple more confirmed points there, we could consider that trend as a potential breakout and then look to position ourselves in it. But for now, my thoughts basically are to just continue sitting on my hands. We look at the SPY, we look at the Dow Jones, we looked at the NASDAQ, the IWM. Everything looks weak. Everything is stuck under its major resistance levels, and there's no change to the uncertainty in the markets. So we just continue with our process of waiting patiently and then executing when it makes technical sense to do so. So thank you so much for watching, guys, and I'll see you in the next one.